Welcome back to this NFP live trading session. As we begin another session here after the previous successful session, I'm live on trading to trade the NFP. Before we look at any trading opportunity, for the first step, we'll be looking at complete multiple time frame analysis, and I hope that the stream is well, the sound is okay, you guys can hear me. All right, so this is a very important trading session, the most important trading session. As with the NFP, thank you. With the NFP, there are gonna be pretty crazy move that we are already seeing. The market is coming with bigger volume, and you might be able to find potential entry shortly after NFP coming. In just a matter of 2 hours, you will be trading in this live session. So after 1.5 months data is coming, so the market definitely will have some reaction over this data, and we will have the full analysis. Before we look at any trade setup before the NFP, we should be able to see some more. Gold has broken that support now, you can see, and we might see the market, as we in our previous session also discussed about this move on gold, that this market potentially could break below. And we see that this is the daily market structure. In fact, after the previous daily strong rejection from this higher price, today the market has so far shown significant downtrending move here. So currently the market is again pushing that back below to this, potentially to this support level, and we see that there was quite a few smaller time frame breakup structure here, and we are looking at that entry opportunity here for this move back down below. And looking at, if you look at this 1 hour market structure and the 30 minutes, all right, so 30 minutes price action, candle closing with another, so far it's a bearish market that you can see. And if you look at the 15 minutes, also closing with a big bearish doji here. So the market structure here is so far downside that you can see, and that then downtrending market structure may continue to drop little further here, though you see there is a initial rejection from this previous resistance turn support. But here is the twist, here is that this is a currently on a bearish trend, and if we see the market has shown enough confirmation for potential break below, as the price is approaching this fair value gap, I'm looking at possible break below. Still we can expect the market is still to remain bearish here, because this 15 minutes candlestick pattern that you can see, it is currently showing possible downtrend in that market. Therefore, looking at 15 minutes, that you can see there is a very narrow doji, and weak fill is expected here to come back well below, and you can see the price action is reflecting for potential drop down in this market. There's a higher possibility for there's a gap open also. You saw that there is here. The market is maintaining the downtrend from this gap level, and if it is pushing back here for liquidity grab and rejecting, we will be selling this market back below. If it is going up to fill that zone and coming back down here, you can use a pending order below if the market breaks. Okay, so it just has crossed that high, and we'll be using a sell stop order below this level. Stop loss above this high. So it's not a market order, it's a sell stop order with tighter stop loss. And the market is at that level that we are looking at entry. So I'm going to I'm opening sell by market here. Let the candle close, let the candle close. We want to see the candle closing below. We might see little further retest. This is the 15 minutes price action. So from the current market price, we'll be placing pending order below this low here, below this level. Okay, so stop loss above this high, 49 pip stop loss, placing sell stop pending order at 4054.43. Stop loss at 4059.24 and TP at, you can take it to the lower level here. If the market breaks, we'll keep at this level 4043. This is sell stop order, so not market order. So it's 4054. So you have enough time for risk setting. And we see that there is a local upside here. And if we look at this market structure, which is basically this move back to the upside, potentially be another a break to the upside, and you might see that may bring another trading opportunity here in that area. So breaking below, we will be entering this trade for this move back down here. If the market breaks below, then we will be in the trade. And I'm looking at the price to retest this high, as there is a one single bounce. If you look at the 5 minutes as well, there is a possibility for that move. This is a 15 minutes price action. This is a 15 minutes doji being formed, and looking at the market to potentially to reject from this higher price. All right, so let's wait for the market to show up. Waiting what's going on with NFP today, and we are looking at that setup. So what's your status here with this trade? We are looking at so far we see that bearish price action. So can you confirm in the live chat that if you place the pending order, so I know that how many members following this trade, it's a pending order until the data comes. So you will be, my dear, welcome. We will be if this pending order doesn't trigger or trigger before the NFP, we need to look at this trade. Will not be running after the NFP. And now here, this market, after breaking this low, getting an upside bias. If you look at the 4 hour here, that you can see the price just has touched the 4 hour high here, and that's a pretty big move within a short period of time. That might go a little higher now. The market is quite volatile due to the NFP. So here we'll be on the trade if the market is breaking that low. Getting some reaction from the top. That is there's a pin bar here. So where the market is heading. This is a sudden breakout. So before the data, there is a, with this pin bar, it has entirely broken above this level here. And from the 4-hour, if we look at, gain significant momentum here. So it's a sudden breakout to the upside for this. Price on the daily level that you can see, daily resistance line. Didn't look back, guys. Didn't look back. So you'll be. I'm still keeping that pending order there to see where it is heading. So this level that you can see where it is daily high. So with a very strong liquidity grab on this move back to the upside here. At the moment, we are just looking at the price action to see if this is a valid breakout or it's a false breakout in the market to potentially return again back below, because more often this breakout more often become a false breakout, such as like that. It's a big trend line break of this long-term trend line. And now if this move that we can see has to do for a rejection back below. Looking at the 15 minutes here. So the pending order that you can see, we could see the market even entirely drop down back below to this support level, which is possible to see the price to break entirely below to that level. To really depend on how the market structure is evolving here. It's a very interesting price action, guys. It's straight coming back again, back below. Okay, so the pending order is here that we placed, and it gone too far. We can readjust the pending order for this current market move. As NFP coming, the market become very, very interesting here. So you can see there's a very strong break to the upside and again rejected back below. So I'm going to look at here for potentially to see the market, how it reacts. So we'll be going out from the pending order and we'll be waiting for the market to show up price action pattern here. This is very interesting, right? Patience is key. You see, there is a. So I am out with the pending order. We will be readjusting the entry because there has been sudden breakout, and let's see that how the market rearrange itself again. Closed pending order. This might be entirely a fake out, and this price may potentially continue to drop down back below to the support. If you look at, and in that case we might see the market coming back to this lower shadow here. And looking at the 1 hour, this is the 1 hour market structure, and that's a 1 hour doji has tested the previous session's high. Now with this 1 hour close, we will be able to enter again once we see the market has really, if even this one is closing as a red doji, we can expect downside depending on how the candle close, of course. If you look at the 5 minutes, it's a big one bearish rejection from this higher price. Now that candle now could bounce back up or continue to drop down. And if it is continuing to drop down, then we might see the price is coming here. But to enter a sell, now we want to see that lower time frame, especially in the 1 minute chart, stronger liquidity grab. It's one single move that you can see from here. And with this one single move, we want to see that pullback and then continue to drop back below here. Are you guys with me? What's your thought on that? That's a very unusual. Yep, pending order closed, and no problem. We can re-enter anytime. The goal here is to keep, you can see it has gone too far here. So we can, if we keep here, then you see this is a big move. Again, one single drop, we might face a pullback. And that pullback might take us to the stop loss. So the pending order close, because our entry is here. And if the market triggers us here, there's all the red candles. So the market could bounce off for a pullback, and that might take us to the out of the trade. That's interesting. That's really interesting. So there's that's a complete drop. So if you look at here, it is still maintaining that bearish market structure. So this is if you look at the 5 minutes, just one single breakout, right, with a big move back to the upside on the 5 minute chart. Inverted head and shoulder on 15 minutes time frame. So you spot this as an inverted head and shoulder. That's the inverted head and shoulder, but or here, but it will come, everything will come after the trend, guys. This is what, if you want to know the secret of the market, okay, only learn 3 things, right? If you want to know the secret of this universe, like knowing everything, how things works, then you need to know 3 things. Okay, because if you go to the very fundamental aspect of the matters, then you will find only energy, and that energy has frequency and vibration, right? So there's nothing beyond that. In the market, there's nothing beyond market structure, liquidity, and price action. Head and shoulder will come later. First is to know that what is the trend in the market. This is the first question that you need to ask before anything else. You see that there are two lines in my chart. This one, this is another one which was drawn before. So in this line, there is something that you can spot on. And what is that? So series of lower high. And this series of lower high is in a downtrend. And then there is one single bounce here, has broken out of that trend line. That series of lower high is now broken. That's a break of structure, liquidity grab, and you see that rejection. Now, if this is a valid breakout, this inverted head and shoulder, I think you're talking about, this is on the 5 minutes. We might see that continuing to the upside and starting a big uptrend. The other possibility is to drop again back below. I'm still biased in the bearish direction because the long-term trend here is bearish. You see that this trend line is still maintaining, and this one green candle that you can see on the 15 minutes, that is liquidity. Okay, so the market structure down, liquidity has taken from the top. So two things is signaling you downside. Price action showing up now. If we see that enough price action confirmation, I would say this market to continue to drop even lower here. Now, it could be any direction, right? The market is always, all right? The market is a random price action here, all right? So, but the more you will be in the direction of the major trends, you can see that that's where you will see that how the market really react. So, therefore, here the bias is still in the major direction of the trend. So unless it changes the trend, and coming up NFP in just 1.5 hours, it's not a big time, but that's gonna be a big trading opportunity. So don't miss out this session at any moment. There's a lot to take from here, and we will be learning how to identify the actual trend based on the multiple time frame, and also how to read the market structure, and also the price action confirmation. Price action confirmation is very important because if you truly want to be a profitable trader, then you must know how to read the price action, which is very important, right? So because every price action has a story to tell, we will be looking at in-depth understanding how to read that. And by the way, in the meantime, don't miss out to like this stream. Did you like? And I'm pausing it for 2 seconds. 3 seconds. So that everyone can smash the like button. And also don't miss out to click that black button or red button you can see. Welcome. Thank you. Right. So when you are looking at the market, right, the first thing as a trader need to look at can you have a look at dollar yen? Yeah, we will be keeping that one on watch list. I was looking at also earlier. Dollar yen was bullish. I think it's gonna now on a pullback. Dollar yen is, come on here. Dollar yen, we saw there was a breakup structure and now it's pushing back again. It is a bull market. We'll come back later on that one as soon as it shows proper price action confirmation. Here I'm looking at going back to the 4-hour again on gold to see that the market, you see this is the 4-hour price action on gold. In the 1 minute we saw there was a big move, and if you look at the 4-hour you can see it's a very narrower volatility here so far. This is the high of this session and this is the low of this session, right? So two significantly important session here. And looking at the 1 hour, okay, so 1 hour candle close with a narrower green doji, right? Which is a really interesting price action because I was expecting it to close as a red doji, but it crossed the previous hourly high. If you look at, this is the previous session's high. So the only thing that it creates a very narrower green doji, and the market might find it as a support to bounce back to the upside. But at the same time, it is still can break below here. So because here it quite a few long wick. If you look at this 1 hour doji also crossed the previous one's high and then close back below. If you look at this one, the same way, cross the previous one's high, close back below with a narrower candlestick pattern. So now this one also crossed the previous one's high, close back below as a doji. So if you look at the high of those candlestick pattern, we see that the market is getting rejection from the higher price. And that's could be that this market too potentially to break below. It still can break above, so that's what we are looking at. If it breaks above, then I don't think it's gonna be very strongly bullish. It might still come back below again. So very interesting reversal price action formation here in that area it has created. And so there's another 5 minutes candle closing here, and now this is an undecided market at the moment, so it can move in both directions. If it breaks out, then if it changes the trend to the upside, you will be looking for buying opportunity later after the price action confirmation. Here so far, it created bullish move in this area. I think it's gonna changing the trend. So we have 1.5 an hour for the NFP to come up, and it was very choppy market in fact here. So when the market choppy like that, you just need to wait for a breakout. That's what market give us at the moment. When you talk about sessions high and low, means 1 hour range. Yeah, so this is what we can see, that from the if you look at here, right, this is the 1 hour price action, and that's a very sideway market. And in this kind of market, it's gonna be very hard for you to eventually see that clear direction in one move. So it might just go a lot of up and down. See that it's complete now from the 1 hour, from the daily, what we are seeing that the market is going to potentially hit that daily high here. From the 4 hour also, the market is, so it's a one candle range. So you can see that there is a one big red doji, and the market is ranging in between that. So this is the support of this red doji, and the price after the two candles drop to their support, now again potentially going to hit that high here. It's also the daily 20 EMA. So it might be changing potentially a direction here. So I'm looking at the 1 minute chart. We see it created a support here. The market is trending with a bigger impulse. That might have changed the trend here. If you look at, this is the daily move, and it moved in both direction equally. So if you look at here, you can see this is the daily high, and this is where the market opened. The price tested the lower part of this daily range. So before NFP, the market is coming at in the balancing point where the price open on the daily, right? Now with this spike, what you would see that the price will be crossing any of these point, either low or the high. The interesting is that if the market crossed the high, we could see that eventually trending back below. If the market crossed the low with the NFP, we would see the market is trending back above. It is also the weekly resistance. So if you look at the monthly bullish, if you look at the weekly, this is also the weekly resistance line. So there is if you look at this, is the 15 minutes candlestick pattern. Do you think it's gonna be bullish, or it's a false breakout? The market does more often false breakout than the valid breakout. And crossing this high 4076 or 4077 could be a possibility for coming down again. This is, if you look at daily here, you can see this is the daily level where the market opened, and it is less likely that this daily candle will be boom, big pull candle without breaking well below here. So therefore, going to 4077, 4076 could push the price again back below, right? And also this is the previous session's high here. So once the market will cross this, it's gonna break the series of lower high first time, and that will push the price again lower. So sessions high and low is normally considered the 4 hour. Okay, 4 hour is a one session, and the reason is so important 4 hour is because 4 hour price action is where you can see a whole session, and is important is because each session has a high volume period, right? Now, for example, if you look at like in one session's volume, you can see the whole day's volume in that. The reason is, if you look at, for example, Sydney session, so the banks place their order during that, you can find the institutional volume in that sessions. So therefore, if you look at the 5 minutes candle, 15 minutes candle, in one candlestick you may not find institutional volume, because probably this is the time when the candle was formed in a low volume time. But when you look at the 4 hour, it's difficult to avoid this every candle without institutional volume, because one candle will form in Sydney session, you look at the volume in it. The other candle will form in Tokyo session, also will have volume in it. The other candle will form in London session, will have volume in it, and then NY session also volume in it. So here it's maintaining this series of high and low and pushing that price back above here. So series of high and low that you can see on the lower time frame. So it crossed that all this high and tested this. This is the daily resistance, and that's a one single move back to the daily resistance. Now from this resistance, you can expect now potentially another pullback below. Now we need to see that overextension to the upside, and that can give us. So this is where you can see this is a current swing low. Breaking to any of the swing low will give us an entry opportunity. There's a 15 minutes crossover of 10 and 20 MA that you can see. So which is a sign of bullish price action formation. There's an imbalance here in that market if you look at from this level to this level. Welcome. So what's your bias today with the NFP? Let me start a poll again. I really like the poll because every time poll works, whatever the comes most of the vote. So uh, spike up or a spike down. I've shared a poll. Let me see that. What's your thought on that? The long-term trend here is, if we look at the weekly, monthly, and daily, bull market. So from this level, there is a one single bounce back to the upside, and you look at this is a big long week now. Don't you think here that the market potentially to come down back below? It has overextended back above. There is a big bear flag in the 4-hour time frame. I'm expecting gold to drop to 3900 level. Big bear flag on the 4-hour. drop this way. You would see that ultimately the market after the NFP, even you could see that daily close potentially to close as a doji, and tomorrow the market might bounce back to the upside, because the market where the price is struggling to move is where there is a weekly resistance. You can see that this is where the weekly open. Gold entry level, you are waiting for that entry. This is the weekly range, and if you look at the weekly move, the previous week was big long week, pretty volatile. This week so far, the volatility, if you look at it, it's comparatively lower, so 1330 pip. So therefore, breaking below is where we are looking at entry, right? So the market is where it is. Entry level is still the market where it is now. It's where the daily resistance, and it definitely, the market will find it difficult to break that high without coming down well below. So our entry is on breaking any of this extreme low for upside here. And we are coming to see in just a matter of an hour the NFP. So the spike is where might break this low and then to return back again. So if you look at here, very narrow one candle range, right? One candle range, guys. This is the 1 minute chart. One candle range is not a very good mark, like good area to enter. Now to buy or sell, nothing. Hold on to that. Wait for the market to rearrange itself. The market needs to come to an important area of value. That's where you gonna have better entry opportunity. So if you look at this level, this is an order block as well. Can you explain? What is your entry level and target? Okay, so yeah, of course, this is what we are doing here. We are looking for entry and target, right? But at the moment, the market is on a resistance. This is a daily resistance, right? If you look at this dotted line, is where the daily resistance, and in that zone the market might range for some period of time, and it may create quite a few false breakout, and that's where we are looking at entry after the market reject from that level. It's if you look at this 1 minute price action, it's on a bullish trend. But that bullish trend is, if you look at from here, it bounced off this daily level. So therefore, it has just broken quite a few sessions high. It's not a good area for a buying opportunity. So you need to synchronize always the trend and daily and sessions high low. I'm not bearish on gold yet. We are waiting for it's a bull market now. So look for buying opportunity from a sessions low in a bull market like that. If you look at the 4 hour, it's on the sessions high and it is a bull market. So you see, the market will give you a lot of false entry. All right, this is where the trap is. If you can spot that trap, you are profitable. Let me tell you what it is, guys. This is gonna be changing everything, how you look at the market. So if you look at 4 hour candle, right? Let's say bull candle. The market opened here, gone back to the upside. It's a bullish market. Suddenly, what do you see? The market not always will do like that. Look at the lower time frame on 5 minutes, 15 minutes or 1 minute. One sudden breakdown, straight drop to the support level, to the intraday support. That means on the daily support or the 4 hour support. And when the market dropped to that support, that's where the entry, because it's a bull market, the market already has made a sessions high. On the lower time frame, wait for the market to break down to that previous support level. And that's where the entry opportunity that you can look at. Now, to find that kind of entry where you'll see that in a bull market, there is an opportunity. The best way is to wait for the market to come back to that level. That means to the sessions low in a bull market. Okay, so never trade based on price level, always based on the price action. There are two very important distinct difference, very different. Price level is not important. The important is price action. As a trader, we do not worry about either gold at 3,000 or 4,000. We always look at how the market is reacting to certain level. That is what you need to look at. Okay. It's getting the rejection on the lower time frame. Might range here little more time. Don't trade against the trend. It's in a bull market in this lower time frame, and until we see the trend direction changes, you wouldn't be able to sell yet. That bull market needs to turn to a bear market before you plan to sell. Finger spamming. The trend is very important to find to an entry. Okay, so trend continuation is very important. We are approaching the NFP coming in few minutes, so we will around 50 minutes remaining for the data to come up, and it's after 1.5 year, right guys? Half a month, come on. After 1.5 months later, the data is coming, which definitely will have some impact in the market. And today's news effect, okay, that's an important point that we need to consider. Here now slowly potentially creating a reversal. This is significantly bullish that we have seen. 30 minutes. Looking at the multiple time frame will give you a better understanding of the market structure. There is a bullish fair value gap that you can see here in that area. Market may break that low to fill that imbalance. Here is the market structure if you look at in this area. But you could see that this is structure breaking below and then going back up. So here it is still bullish market structure. This is a consolidation pattern. And looking at the 4-hour and the lower time frame here, the market has created a strong bullish lower time frame price action. But at the same time, it's on the daily resistance. What we need to look at here is the market to drop down for a pullback to this important area of value and then to go long, because it's already has shown that bullish market structure. This is a fair value gap. There's an order block here, and we'll be waiting for a break of structure and then to go long. As there is NFP coming, spike could be down and then potentially could continue to rise back here. There is a potential for bounce. So continuously the market is maintaining bullish price action. So therefore the bias, if you look at here, could be to the upside. Do you think it's gonna be your bias is bullish? So with the vote, if you cast a vote, as I mentioned earlier, the pool really helps. That in the past that I have seen almost 23%, almost 95% cases, the polls came out to be right. So looking at here, if you look at, can you cast a vote, and we'll be looking at to see, thank you. And you can see that spike up is, most of them is predicting, and the market most likely would do that as well, because this is what we see, that pool is what the market really shows up. Now here, breaking that low on the lower time frame, as the data coming, we want to enter within a short period of time and then exiting as fast as you can. We'll be looking at bullish entry. This is the current support. There's a 5 minutes 10 EMA as well here. We're going to use a pending order here. We can use pending order for breakout. And we want to look at this trend line break, and we'll be placing a pending order here. We'll keep this pending order until the NFP at least 10 minutes earlier. If it triggers. If it doesn't, we will be closing the pending order. We'll be placing here little higher because you don't want to get caught up in a false breakout. So it's 60 pips stop loss, and expecting a spike above. We'll be taking bigger profit target, but we can readjust at any point the entry based on the price action. So it's gonna be a buy stop order. $4079.39 stop loss. 4073.33 TP at 4098.28. So the trade is the pending order is placed, still not triggered. Near there we might get a trigger, and looking at an upside bias here. Entry. The trade is active. The trade is active. Very interesting. And running a little profit here. Gonna caught up in a false breakout again. So after multiple liquidity grab, the market, the trade is active. I'll give a shout out whenever we'll be taking any, moving the stop loss or taking any profit here. So you bought from higher high, and the rest you need to leave it on the market. And so before NFP, we want to take some potential move here so far. And before NFP, we want to take this move back to the upside. If the market back to back two smaller dojis, so that's a bullish price action as well. Now with potential bounce, there is a threshold that you can look at 4085. If the market bounce off at 4085 level, it's gonna be nearly to 60 pip. We can move the stop loss at entry. Here is some, again, some rejection coming here. So if the market breakout before NFP 4085 level, we'll be moving the stop loss at entry. We'll take again partial profit. So I'm running this here, and as soon as the market will cross 4085, we'll be taking half profit, and more than half. So I'm running 0.74 lot, so it's gonna be, I'll be taking 0.4 lot off and moving the stop loss at entry, because there is NFP spike coming and will not run on the spike without risk free. So here is a couple of smaller doji. So the 5-minute candle closing, which is potentially to be a bullish market structure. It's to me potentially bullish price action. but it didn't have a false breakout. So the volume little drop before the news, and so far multiple rejection back here, and very cool, getting upside here. We are on the bullish side, the market structure showing up to be bullish, and waiting for a potential spike back to the upside. Okay, so entered in the profit area. Significant bounce back to the upside. Now before the data, you want to take profit partially or fully depending on the price action here. First, want to see the market is moving above to 4085, and we are up 24 pip. Now that's is approaching that resistance line. As I mentioned earlier, as soon as the market will cross 4085, I'm going to take 0.4 lot closed and moving the stop loss at entry. Okay, cross that here. So I'm taking 0.4 lot profit up, taken profit and moving the stop loss at entry. It's a risk-free trade now. Boom. Are you guys with me? Cross that 4085. Say yes if you are with me and if you are enjoying this trade. And it's coming up NFP, and the market before the NFP is really crazy at the moment, and it's still, the rest is running, the stop loss at entry, the rest of the position is running. I am running still another half of the position, so I'm still running 0.34 lot on, but a stop loss at entry to risk-free trade. And say yes if you are with me, as exactly we are cooked, bro. Thank you, that's awesome. Why you are cooked? Happy cooking or sad cooking? Did you guys enjoy the trade? We still have something more. We are waiting for the NFP and I want to enter again. This is now risk-free trade and taken half more than I have taken 60% from 7.4 lot. I have taken the 4 lot, 0.4 lot off, 0.34 lot I'm running, and it's risk-free. Thank you. Are you cooking? That's what you need to know, guys. Trend, as I mentioned earlier, you see the patience pays off. And since the market was breaking out, I was waiting for this breakout because it needs to do enough. It needs to take enough liquidity before it gets, right? Before it gets in. Now, what we need here, guys, is now it can come for a spike and take us out of the rest of the position. But if you're lucky enough, if the spike is to the upside, even before the spike, we might get fully to this 195 pip profit hit. So far, we have taken here 90 pip, right? Now, in the meantime, have you liked this stream? Did you like? If you like, you like it. If you don't like, also don't like it. And also don't forget to subscribe to the channel if you haven't done yet. Now, what we are looking here, before NFP, we still have 25 minutes, right? There might be some false breakdown now. And then once the false breakdown is done, we might be able to see that liquidity grab again here. And now the possibility for a spike up is that if you look at the pool that we have posted, as I mentioned, have you casted vote on the pool? You see that the pool is 58% saying that a spike up. The market is so far up. So that's why the pool really helps. Have you cast a vote on the pool? I have posted in the chat. If you haven't, just press that vote and let us see how many percentages ending up becoming bullish or bearish. So could you just briefly explain why you place a buy stop order? there when overall market trend was bearish at the 1 hour. It's always helpful to watch an experienced traders trading live. No, that's my pleasure. Thank you for that. Now, look, this is where the understanding the multiple time frame is very important. So if you look at the multiple time frame is the key here, right? So synchronizing the lower time frame with the higher time frame, that's where you see that the clear picture in the market. So prioritizing the impulse, right? For example, if you look at this 1 minute market breakdown, breakout, okay, couple of things that, there are smaller details. Paying attention to detail is very important as a trader, guys. If you want to be a really successful better trader, then you must pay attention to detail. That's where you start to see a different picture in the market. So paying attention to detail, what kind of attention to detail that you need to look at to understand or to predict a breakout or breakdown. Keep in mind, there are 3 secrets as we discussed in the beginning of the session. Market structure, we might get a TP2 hit very soon, 200 pip. Market structure, liquidity and price action, right? So the liquidity graph, that means the false breakout or breakdown, which way the market is doing. That's very important. If you look at, let's say, a trend, okay, like this, a smooth, like an ideal trend, that's not a good trend. An ideal trend is not a good trend in the market. But when you see a trend like this, broken the swing low and created a new higher high, and then broken like that, created a new higher high, all right, that's the trend that we are looking at for bigger move, right? You see this is a powerful trend because it breaks the swing low and it grabs that liquidity, the fuel for bigger move. Now, if you look at this 1 minute price action, what made me to place this pending order above? This area here and also this area. Look at this zone here. What is the specialty in this box? See the lower part of this price action, then it will be very clear to you how the candle wicks has formed, how the market rejected from a very lower price, and how many times it created false breakdown and then bounced back up. That's where you need to look at. But if you see an ideal market false breakout, you see that the market will straight go up, straight come down. It more often creates this kind of false breakout. Now it's on a pullback at the moment, and as data coming, we're looking at potentially a retest. So ending the pull, and you guys will see the results. 61% spike up in the market so far, showing the same pattern here. So it's a risk-free trade, just letting you know, our stop loss at entry. So in case the spike down, we will not be losing anything, but make sure your trade is managed properly. Trading is not difficult, but most profit will come from trade management. Very important, trade management. If you're not managing your trade, then no matter how good you are as a trader, it's gonna be difficult to remain profitable. But if you want to be a day trader, day trading is fun, right? You don't have to do anything, just you need a PC or laptop, or even from, I don't recommend to trade from mobile phone unless you are using any signals or anything like that. But if you're trading yourself, then make some time, specific time, right? You want to be a day trader, then you must sit down in a zone or time or place where you can focus, and then bigger wins, smaller loss, risk management, lot sizing properly. That's where the secret. How many of you want to be a day trader? If you want to be a day trader, if you want to escape the 9 to 5 or anything that you want to increase your earnings, even if you want to keep your job on, I don't recommend you to quit your job, but what you can do is you can create an additional source of income. And to be a day trader, you don't need to spend hours of time. You need 2 hours a day, 1 hour a day. Once you learn, that's all, right? So write down in the live chat if you want to be a day trader. I want to say how many traders here really passionate about becoming a day trader. Okay, so this breakdown, this after this breakout, we see now consolidation before the data, and that consolidation might be right. So the way the market structure has shown, the bias is still to the upside. It might come down for a deeper liquidity grab, but the bias is still to the upside, and we could see still potentially moving back up. In welcome. Yeah, so being a day trader means that it's freedom. Anywhere you can go, anytime you can do, once you have the system, once you have the setup ready. You don't have to reinvent the light bulb again, right? Just learn a strategy that works, and then implement it every single day, even in a demo account. So here we can see the market is showing bullish. Patience is very important as a trader. If you're not patient enough, it's not gonna happen. So the first quality that you need to develop is patience. Developing a strong trading psychology, right? Don't FOMO trade, don't over trade, don't over leverage, don't over risk. Keep the winner running, the old school thought. Keep the loser cut as soon as possible. Okay, so it's maintaining that uptrend here. Just 15 minutes remaining for the data to come up. So it's a risk-free now. So we are having, in just matter of 15 minutes, average hourly earnings, non-farm employment change, and unemployment rates. Unemployment claims shown tentative, so it might come along the way, because there's no specific schedule for that. And then tomorrow, also big for Gbpjpy, Euro, and then again coming flash manufacturing PMI as well as flash service PMI on dollar. That's also gonna be pretty volatile move that you can expect. Here is the market structure showing to be bullish. Now before the data, it might create potential false breakdown and then bouncing back up. Are you still bearish for NFP, or you think we are going to smash up? I think it's gonna push back up because the trend looks very strong. And this kind of market structure that you can see, it's not sign of bearish market structure. So there are possibility for upside, but again, we need to just wait for the data. But more often you see that when there is a bearish move, that means with the NFP, the market, more often you'll see that it will move in a sideway like that. We'll do like that, and with the NFP, boom, will break down like that. But what kind of market structure we can see here is bullish, right? So that kind of market breaking like that is hard, but it's possible, depending on, because it's now 1.5 months later the data is coming, so there is a significant delay, and depending on, of course, the sentiment could change. But here now we see, if before the data, if the market breaks here, somewhere here, waiting the price here, that's a sign of bounce back again, because false breakdown here can fuel that market back up. More often you see that I have countless NFP that I have traded, and I know all of them what happened. Just before 5 minutes, 10 minutes, the market will break down opposite direction of what the market is really want to go. More often, or you'll see that. So for example, if the market is trending like that, creating series of higher high and higher low, just before 5 to 10 minutes, you see the market will break like that, just to bounce back up again. So breaking below before NFP like that is a sign of spike back to the upside, or the market continues to trend. It just grab liquidity or gain momentum for further move back again. So, but based on that, we're not gonna risk whole account. Definitely we are risk-free trade, because the spike can go any direction. The market may still remain bullish, but it might just come back down and take you out of the trade, and then boom, bounce back up. So trading in during that news is not a good idea at all. Thanks for the insight. You're welcome. This is what we do every single day, guys. If you are new to the channel, don't miss out to subscribe, and also press the notification bell so that you are not. I do post regular analysis on the channel to, this is what I'm doing for a very long period of time. So don't miss out to press that notification bell so that you are not missing any of the content. And there are 2 lives that I'm coming every single day in London as well as NY session. Now here, there are some sign of short-term reversal in the next 10 minutes. Let's see that what the market is doing. In this price action that you can see, it is still bearish. It might come down for a deeper liquidity grab. It's still bullish, but not bearish, bullish. So we see that lower time frame here, it has created a head and shoulder in that area. Now that head and shoulder might push the price back below, and this is the recent support. So it just has broken that support that we discussed. Now, as we have 8 minutes for this candle to close from the 15 minutes perspective, also stronger bullish price action here. Now, if it is closer to our entry, because I don't want to out with the rest of the position with a spike that might cause some down so that if you are out with the spike, that might take you some extra minus, like due to the spread widening. So before the spike, the market is not picking up, you might be closing the rest of the position as well and wait for the spike to happen. Because if the spike takes us, due to the spread widening, even if we are at our stop loss at entry, it might take 1% or 0.5% just by widen the spread. But if it market goes up before the spike, then we will keep it running, because I want to take that move back to the upside again in that case. So you can see it's breaking that support, trying to move back to the upside. And before the data, once the market managed to go up here, the possibility to bounce back up is higher, but not certain. The market can move in any direction. So here is the drop. Okay, so pushing back up so far. Now we have the 5 minutes candle closed. So that's liquidity sweep here. And Okay, so getting some bullish bias here, and okay, the market structure is bullish as we mentioned. It has broken below and now showing potentially upside. So I'm still biased to the upside. See that where it is heading to. Now, this consolidation was necessary actually for a liquidity gap. So it found a support because if the market was moving without this kind of consolidation or pullback, that was sign of force breakout. Now it has created a structure here that the market may respect that support before it breaks to the upside. And if you look at as I discussed that I traded countless NFP, and as I mentioned that more often the market will break before the NFP, opposite direction of its original move. Now it still can move down, but it did that. In fact, it has broken out of the structure, grab the liquidity. Now it's breaking back again, and so over and over again it's breaking to this support. Here this break little unusual because I was expecting to go ahead and creating a new higher high. Now this might create even a head and shoulder. If it does, then you could see the downside, but less likely. This is the 28th of there's one more 1 minute candles remaining before the data. This last breakdown was unusual. So this move was little you can see there is one rejection, it's another rejection. So it's now creating a kind of head and shoulder that may break to the upside, continue to rise, or may break down here. So in both cases we are open until we see in fact the real move happens. 17 seconds, 15 seconds remaining for this data to move in one direction. It is exciting, isn't it? It broken back below. Okay, broken back below. Most likely, if you look at here, average hourly 0.2% non-farm employment change, increased unemployment rate increase. So mixed data. How does this impacting the market structure here? huge spike down and then back up here. So it might, as I mentioned, the last head and shoulder that created, that was that brought that market back below, and we are out with this second half, but that's fine. With this move, so it might now, what it could do, guys, is to going up and testing the resistance, coming back down to the support. So it created a head and shoulder, and after the head and shoulder, the market now trying to push that back below. There's a daily low. So to enter during these times, little cautious, because you want to see an important area of value before you look at any entry here. This breakout that you can see here, if you look at, it's one single bounce back to the upside without proper pullback here in that area. So that might bring that market back here below for potential rejection. So there's a complete break below here. So this market may potentially come back here now for another retest. The possibility here to drop back to this support is higher. So I'm opening another sell from this level with 80 pips stop loss to take this potential move back below. It's a very quick move. Stop loss above this high, TP target to this support level with a tight risk. Sell is on. Another trade, and we might take it very fast because I want to say that the market is in fact really moving back below here to this support level. And the market potentially to drop down here. The profit target, I will be moving at this level, 4075. And there is a significant break, but I think the market may potentially come back here for another retest. So the TP target I set at 4075.00. So the doji has formed and I'm sold here for another potentially 146 pip target, for this move, and I believe you guys are with me for that. All right, running in profit, and anytime I will be taking, in case I would like to take it to this level here, and the potentially to come back to this 4075 level. Awesome. Running profit. Holding on to that. It's most likely to break this low here. Even could break further lower. 15 minutes candle close with a big bear candle, and I'm waiting for the market to potentially retest that low. Still holding on to that for potential downside. I'm not moving stop loss at entry, not taking profit yet. One more drop can give us the full TP hit here on this trade. All right, coming back down here. Boom, nearly there. Nearly there. Not closing manually because I want to see that dropping down back below. Come on. Gonna take that. Why it's struggling that level, I really don't know. Okay, so if this 1 minute candle not showing a very stronger bearish, we might get exit by manually. But if it is breaking below, I'm holding on to that. So far showing still downside. So I'm still holding on to that. It's maybe has reached that key level, and okay, so you're again getting rejection from the higher price here. And now this move might bring that market back below potentially here. Okay, so if this market breaks below here, expecting it to cross this low, and all right, so it's worth holding it to that for the full TP hit. It didn't hit our profit target for, come on, for 2 pip, less than 2 pip, but now it start to drop, and here I'm holding on to that. The possibility to drop again back below is higher. So the market is starting to drop back below here in that area, and so the 15-minute price action is here is still bearish. All right, cool. So you see the price action is showing bearish, and I'm also ready to close manually if needed. I'm still holding on to that second trade. I think it's gonna potentially break below. So I'm closing it now manually. I've closed it manually with nearly to 117 pip closed. It in fact has dropped to that level. Okay, so it in fact has, I closely earlier, couple of pips less. It's breaking in that direction here now. You guys look at. Now it might potentially continue to drop back below here, and that was amazing, isn't it? So it has tested that support, and we are out with the trade. It's a big day. 2 trades, 3 trades earlier in London session 1, 3 of them winner. Now this one, yeah, I know that, but guys, this is what the trading psychology comes in play, right? And that's why you start to learn trading. So that's why I encourage you to watch the live session all the time. And when you watch the live session, you get actually better understanding of your trading psychology. We need to improve, and by staying here you can learn and grow as a trader. Now, as I promised earlier, that from this live session, because NFP is a big trading day, in this day, if you guys really passionate about becoming a member of the academy, where by becoming a member of this academy, you can gain access to everything that I have gained over extended period of time. Now currently it's 95% off joining the mentorship, which is nothing in comparison what you have seen, that how the trading strategy that I use. Now if you want to learn that strategy, then I would say that this is a great opportunity for you to become a member of this academy for the lifetime. You guys looking at, you can visit the website www.forextradingwizard.com. So once you visit the website link below this video, just click here to join. All right, click here to join, and then get that 95% off, which is nothing in comparison. What are you gonna get here? Once you join with this 95% off, make sure you check your email, including the junk folder, for all the links and all the premium joining links, where there's a premium group and also educational course. So you can log into the website where you can get access to all the courses, and also you can get a premium Telegram group link in your email to become part of this group, and where you can regularly access all my premium trades, strategies, education, analysis, and also guidance, mentorship. Everything is available in one place. Now It takes time, but it's worth learning to trade. When you are with the mentor, I begin my trading alone and I have lost thousands of dollars. So if you are trading alone, you lost thousand, like maybe 50,000, 60,000, right? Should you lose that, or you just pay, $100 and be part of this trading community for last lifetime, where you can access all my indicator, be part of. Here we just create a group to help the members, nothing else. So you just trade your own, but learn from here, be part of the community. That will give you a big understanding of the market structure, liquidity and price action. And every single day I'm posting regular update and I'm trading all the time whenever the market is open. So that being said, guys, it's a great session with all of you. I'll see you again very soon. Tomorrow, again, trading live together twice. Until that, be safe, be happy. And if you are trading, make sure you are not over trading, not FOMO trading. And must use the lot size calculator before you open position. That being said, thank you. We'll see you again very soon. Until that,